Welcome back. Well, we have Mr. Satish Jamdar, the MD of Blue Star, joining in to talk about the Q2 performance. Hi, Mr. Jamdar. Thanks very much for joining in. While you all have reported a healthy top-line growth with your revenue up over 11% for the quarter, your EBITDA margins have been under pressure this quarter, though you have taken some exceptionals such as the VRS, which is accounted for. Can you tell us what sort of EBITDA performance do you also expect going forward, and what were the pressures that you faced in terms of raw material costs this quarter?
Yes, good morning. We look at a half year and a full year kind of performance. This quarter to quarter is a bit of a, I would say, not a fair way to look at the company, because we have summer sales in the first quarter and mostly in the last quarter. Other businesses are usually, because the capex good in the beginning and end of the year. So it's not a like-to-like on a quarter-to-quarter, but if you take previous half year, and then it becomes more comparable. This particular year, I think on the top line, our growth is continuing. Just to remind you that 2 years back, we were facing top line growth issues because we were cutting back on projects which we found not profitable unless the cash flow was good. So we're cutting back and focusing only on good projects, so that cut down our top line. But I'm glad to say that now there's a perk up, and while the economic conditions haven't really picked up fully, one is seeing growth now in even our project business, which was so far a little curtailed. In fact, I'm glad to tell you that we got the MEP contractor, best MEP contractor award this year.
Sure.
And quite clearly we're seeing customers looking at us in a very different way from all the hard work we've done preparing our projects business, EMPG. Yeah.
Okay, Mr. Jamdar, good morning.
In terms of what happened on pressures, you're asking me, it was really the Chinese devaluation that I think took people by surprise, rattled the markets for a little while. I think everything settled down. It sort of didn't allow margins, prices to be raised because this particular summer the industry did not grow as much as the last 2 years, and everybody had carried forward stocks, and they had to liquidate those stocks in the second quarter, and so all a little bit in the third quarter too. So there's been some pressure, but the good news is that the Chinese prices are down, the commodity prices are down, so we will see the pipeline now improving with margins. We are seeing a good order booking in our projects business for the last 3-4 months, except for the billing, which hasn't picked up yet. We think the second half will be much better.
Okay.
And by and large, every year we've done better than the previous year. So this first half year, though maybe it's little behind on the margin side, we will catch up and certainly post a better result end of the year.
Okay, Mr. Jamdar, hi, good morning. So, even if, as you said, let's not talk about quarter to quarter, but even the first half was a bit soft. What makes you confident about the second half? And if you can give us some numbers, I think in our last interaction you told us 15% second half growth. Are you still sticking to that, or are you revising it upwards or downwards?
Growth should actually be a little better than the first half in my opinion, because I'm seeing certainly some early signs of capex, industrial growth, even some projects reviving, and also because of the input costs being low. I think secondly, the 50 BPS rate cut that the RBI gave, all these are actually signs of what's happening. I'm seeing all the states actually pushing for ease of doing business, and not only at the center but at the state level too. So I'm quite involved in this operation through the CII, and every state is actually pushing for ease of doing business, and we are seeing the investment climate improving, though gradually. And also the summer has been a little hot, say post rains. The summer, the temperature has been high, the festival season has kicked in, and all this is good signs for our sales.
Well,
I'm very optimistic in the second half. Yeah.
Well, I can vouch for how hot October has been, Mr. Jamdar. So just talking about your cooling segment, then how much did you grow as compared to the industry, and what sort of inventory build-up did you see, if any?
Well, in our room ACs, we've been growing 25-30% for the last 2 years. This year we grew about 15 to 20. I think the industry at best would have grown 5%. We actually improved our market share in this particular half year. So this is, things will go up and down, part of life. We look at the long term. I think the end of the year we should post a better sales figure. We should post a better bottom line, hopefully, because the margins, cost control, all those things are still on. In fact, we're looking at a growth cycle. We're looking at a much faster growth cycle for the company in the next 2 years. We should reach $500 million in the new, even at the new US dollar rate by end of this year. Should be crossing 3,500 crores. And we're looking at how to double this in the next few years. That's the kind of, we also are taking fresh campus recruits in a much bigger way. We have, by the way, that we have closed down our 2 oldest plants through VRS and looking for investing in 2 new plants in the next 2 years. So, so more modern factories. Our R&D, we launched the VRF, which is full inverter, one of the best products, I think, in the world today. And we will supplement that with the smaller range, lower HP products, which will be great for high-end residential requirements. So the whole range of VRF we should have. And I'm feeling positive that things will move forward, not only externally, but also what we are doing for the last couple of months and couple of quarters.
All right, Mr. Jamdar, point taken. Thanks a lot for your time today. That's Blue Star.
Yeah, thank you very much.
The stock now trading a bit flat. We'll take a break on that note, but up next,